Welcome to an exciting era of economic collaboration and growth. The year 2024 is poised to witness a significant surge in Middle East investments within China, marking a dynamic shift in both amount and scope. Sovereign wealth funds, driven by the imperative to diversify their portfolios, are spearheading this surge. The synergy between Middle Eastern investors and the thriving Chinese market is set to create a powerful partnership, fostering financial prosperity and deeper connections between the two influential regions. As bankers navigate these opportunities, the landscape is ripe for mutual benefits, contributing to the further globalization of economies and the strengthening of international financial ties. The future holds promise as the Middle East and China embark on a journey of shared prosperity and strategic collaboration. Middle East investments in China to bloom in amount, scope in 2024 as sovereign wealth funds aim to diversify. Bankers, electric cars, batteries, and energy storage will be areas of focus early in 2024, with consumer segments to follow, says Deutsche Bank Middle East CEO. Sovereign wealth funds will expect portfolio companies to provide domain expertise, employ local workers, and sometimes reinvest directly. Sovereign wealth funds in Saudi Arabia and the United Arab Emirates, UAE, are gearing up to invest more in Chinese companies in 2024 as the oil-producing nations seek to diversify their economies and broaden their global investment portfolios amid warming ties between China and the Middle East, according to the regional head of Deutsche Bank. State-owned investors in Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the UAE invested more than $2.3 billion into Greater China in 2023, compared with about $100 million in 2022, according to Global SWF, a database that tracks the world's sovereign wealth funds. This came amid Beijing's push to strengthen ties with the Middle East, following Chinese President Xi Jinping's visit to Riyadh in December 2022. Saudi Arabia and UAE companies are turning their attention towards China because they want to diversify beyond the US or Western Europe, and this is driven in part by their confidence in the strength of China's economy as well, said Kees Hoving, CEO for Middle East and Africa at Deutsche Bank. The Jafal Fund of Funds, owned by Saudi Arabia's $800 billion Public Investment Fund, PIF, in December, increased its stake in EWTP Arabia Capital, a joint venture fund with Chinese tech giant Alibaba Group Holding, in a bid to tap Chinese tech companies with the potential to expand in the Middle East. Meanwhile, Mubadala Investment Company, Abu Dhabi's sovereign investor, opened a Beijing office in September. Middle Eastern sovereign wealth funds see opportunities in the attractive valuations of Chinese companies at the moment, and in the medium to long term they are also very bullish on China and want to strengthen ties with the country through investments, Hoving said. For Saudi Arabia, energy transition is a top priority under Saudi Vision 2030, an ambitious government-led program to diversify the local economy and lessen its dependence on fossil fuels. As such, investments in Chinese companies in areas including electric vehicles, EVs, batteries, energy storage, renewables, and industrial technology will be a big focus for investors, especially in the first half of 2024, he said. Meanwhile, investments into consumer-related segments, such as food security and electronics, will start to pick up in the second half of 2024, alongside other key industries including oil and gas, infrastructure, and manufacturing, he added. In recent years, Middle Eastern investors have been active in China's primary and secondary markets, focusing on top performers in the technology, renewables, and biotechnology sectors, said Huang Xiaoyue, a managing director at KPMG. These investments are expected to not only generate considerable returns, but also introduce new technologies to the Middle East that could help upgrade local industries, she said. However, investing in Chinese companies comes with a host of challenges. Chief among them is uncertainty around exits and market regulations. When the Middle East invests in China, investors want to know what their exit strategies might be in 5 to 7 years. And there are some that say they need to get used to how that might work in China, Hoving said. Plus, reciprocity is required. As Middle Eastern sovereign wealth funds are actively putting money into China, they expect portfolio companies to usher in domain expertise, employ local workers, and sometimes reinvest directly into local businesses. Saudi Arabia really wants foreign direct investment, FDI, and from their perspective, they want to gain exposure to emerging technologies or key assets that they might benefit from in the future, he said. That's why they are open to joint ventures with China. For the UAE, the target areas for FDI are mainly real estate, hospitality, leisure, logistics, and attracting high net worth individuals, HNWBUIs. The UAE government is building a lot of schools, and you see many Chinese families wanting to move to the country, Hoving said. The country is drawing wealthy families from Western Europe, Africa, India, and Pakistan as well, he added. Living in the UAE could be very attractive to global HNWIs in terms of lifestyle and investments, he said. Real estate investment is very good in Dubai. The yield on rent is still higher than in many other countries in the world, so many people see the UAE as a second home. To lure more professionals and capital, the UAE government relaxed its residency policy in 2022, allowing foreign nationals owning local property worth more than 2 million UAE dirhams, $504,000, to apply for a 10-year renewable residence permit, and those owning property worth over 750,000 dirhams to apply for a 2-year permit. Similarly, Saudi Arabia added new categories to its premium residency visa this month in a bid to attract foreign professionals and investments into its local property market. The strengthening business and investment ties between China and the Middle East will also drive the internationalization of the Chinese currency, said Liu Yin, Executive Vice President at Deutsche Bank in China. Over the past 12 years, the use of the renminbi within the context of international trade has progressed to a decent level, and we expect this trend to continue in the future, he said. In conclusion, the surge in Middle East investments in China during 2024, driven by sovereign wealth funds aiming to diversify their portfolios, signifies a pivotal moment in the economic landscape of both regions. The exponential increase in investments from oil-producing nations like Saudi Arabia and the UAE reflects a strategic shift toward strengthening ties with China, especially in sectors such as electric vehicles, batteries, and energy storage. The collaborative efforts, exemplified by initiatives like the Jafal Fund of Funds and Mubadala Investment Company, underscore the confidence in the long-term prospects of the Chinese economy. As Middle Eastern investors actively engage with Chinese companies, they are not only seeking financial returns, but also domain expertise, local employment, and potential reinvestment in local businesses. Despite challenges surrounding exits and market regulations, the mutual commitment to fostering innovation and economic growth positions this partnership as a catalyst for the internationalization of the Chinese currency. The evolving business and investment ties between China and the Middle East hold the promise of a prosperous and interconnected future for both regions. Thank you for your watching.